Good morning everyone. Hello. How y'all doing? Good morning, good afternoon, good evening, wherever you are. I hope you're doing well. Is the market playing games with your mind? I'm sure it does. I'm sure it does. Good morning guys. Good morning brother. Love the messages here, love the messages. Great stuff. Kalimera. Good morning everyone. It's always playing games with the mind. It does. Right, okay, let's bring the chart up. This is Bitcoin. What is Bitcoin doing? What is up to? Let's have a talk about this. Let's give a few minutes for the people to come and join. Is everyone here? Sorry for the postpone. It was my bad. It was my mistake. Every day Carl goes live at the same time that I go live as well. So there was a meeting within the web room and we decided that we should never collide each other. So obviously because Carl is doing this on YouTube and stuff like that, it's been scheduled for a very long time. He cannot change the time, so I have to change my time. Are you driving a BMW? Yes, I am. Not an X model, a 5 model. 5 Series. I love my 5 Series. Before that, I had the 3 Series. Right, okay. Okay, let's have a look. Let's have a look what's going on. Let's go to the big picture, all right? Let's go to the 12 hours. This is the first time frame that I choose to see the whole market, what it's doing. And here we are. Now, maybe you're going to remember the previous week that we marked together the pink lines. That was, the market was coming down, right? We needed to see what's going to happen. It's going to break at the previous high, or is it going to target the previous low? Okay, that was the question. I was coming down, right? Again, low highs. Now, a couple of days ago, yesterday, the day before, I did post into the web room, and I said that we need to be careful. Why? Because we enter into the range. That range is an old range that I marked back in March, right? All the way top here, and then it came back. Small deviation, pushed to the up. It never came close to the top again. Came back, small deviation, broke it, return, and still continue giving me all these low highs, right? But that was an old range since back in March. So what do we notice? We notice that Bitcoin re-enter into these areas once again. And the question was, will it manage to stay inside the range? No, it got rejected and it fall. And now, again, we are about on the same question. Are we going to hold these break of structure? We broke the previous high. Are we going to stay above here? Are we going to try to get into the range again? Or are we going to completely fail and fall down? And then again, what are we going to have? A new low high. And then maybe we're going to target that low, and then eventually that low to continue the downtrend. This is the question. The post that I put it up, let me bring Discord here. Here's Discord. Let me go to the web room. Here's the web room. Let me go to the charting. And that's what I posted yesterday with 2 charts. And I said, hey fam, how was your weekend? The past few days had a good moves up, right? We did. That's why I say the market is confusing. I'm sure that a lot of people got hyped up because everyone was saying, this is it. This is the bottom. We're going up. Everyone will keep on saying that. And everyone taking longs. It's good. If you're taking short-term longs, it's good. Always try to grab the momentum. Anyway, so this is the big picture. What's going to happen? We broke the structure. Are we going to test this as support? Here's the chart. We broke the structure. Are we going to hold this? I made a note that we got rejected to the big old range again. Are we going to get into that range again? That's another question. And also, just to keep up a little bit, I hope you that since the 6th of September, down here, all the way down here, it's an uptrend, right? It's pushing up. So here's a question. We broke the structure, right? Okay, we fell for the range. Are we going to treat these as a correction, or is it going to be a continuation, like a correction rally up and then coming down, or it's going to be the beginning of the reversal, like holding this level and then push to the upside, and then we can call this a reversal, right? The reason I say that, guys, is because we broke structure, that structure here. Okay, let me spread that out. Let me go down to 6 hours so you can see the path. So let me draw a path here. Where's a little tool? Here's my little path. That's the top. You move to the bottom, push to the up, right? I'm taking the highs, the lowest and the highs. Then push one more time, up, down. That's the last time it goes up and then comes down, right? So now it's pushing up and we're trying to break above the previous high. So that was the previous high and we broke it. Good. Now, are we going to test this as a support here? Like this one, are we going to hold this high? Are we going to hold it as a support? Or are we going to fail again and come down? Okay, so that's the question. This is what we are facing here. Bit by bit, level by level, day by day. Don't rush into things. Just use the high time frames, like 12 hours, 6 hours, it's fine. I always start the day with the 12 hours because I would like to see something in between the bigger picture and the smaller picture, right? So this is my small picture, my local area, okay, in time and level, but also I can see on the 12 hours what is going on with the bigger picture, right? So I can stay focused. Now, if it's a lot of confusing, like, people cannot understand what's going on, why Salis has ranges, why there's horizontal levels, I can clear all this for you. So let me hide this for you, hide that, hide that, hide that, hide that. What else do I have here? I can hide that. You can go 6 months away and then I can kill the horizontal. So now we have a nice clean chart, right? We agree? We agree. So we can make things more easier. I have that already here, but I don't mind to do it again. But here it is, a parallel channel, okay? So how you do that? I'm going to delete it, go down here to the tools, parallel channel, trying to link all the tops, right? And then drag it down to link all the bottoms, okay? It needs a little bit of fixing, or like correction with your levels and degrees. It's going to be roughly, okay, something like this. So let's pretend that the top is fine. Let's fix the bottom. So we've got the majority of, the lines here aligned. Here we are. I'll put it somewhere like there, but like the majority of the lows. That's what I want. I want the majority of the lows and majority of the highs. Some deviations above, I don't care. Some deviations below, again, I don't care. I need to see the, the average, the big picture. So this is like the average tops, right? Can you see that? Can you also see how all these, let's say, highs are aligned? So let me lock this so it doesn't move. So here we are. Can you see that, all these angle, like a knife went through, like a katana sword, went through a chasm in the same angle, right? That's why, the parallel channel makes that very clear. So here's the top of the channel, right? You can see that it's like a range. The range doesn't always have to be horizontal, so we are ranging, right? So this is the top of the range. Here's the bottom of the range. And this is like the 50% of the range, right? It's like the Fibonacci tool, the gang box, right? You've got the top, the 50, and the 0, right? Something like that. Now you give me an idea. How can I make a tilted gun box? That will be fantastic. I think I have an idea. That's going to be the upside, so I need to reverse that. Okay, that'll be nice. Let me see if I can do this. You see, news ideas are going to be come out in the scope here. I'll figure out, no worries. I'll figure out if I can have a tilted gun box. Okay. What if I match my parallel channel with my gun box? I'm going to study this a little bit and see if I can get a tilted gun box. If we're going to treat it as a range, why can't we have a range that's going to be tilted? Okay, let me study that and then I'll find a way to do this. I like challenges. Right, so here we are. The bottom 50 and the top. Okay, so what are we seeing here? We're seeing that again we are struggling with the 50% of the channel. Okay, we have a rejection, we fall under the 50%, and now we need to see what's going to happen. Are we going to break and stay above, or are we going to keep on rejecting and then come down to the bottom of the range? You can do that way as well, like parallel channels. Some people like trend lines. This is the case that the people have an eyesight that they can understand trend lines, diagonals, right? My eyesight is being trained to be more horizontals, but both ways are fine. It's up to you. Don't listen to anyone that you've done your TA wrong. Oh, you shouldn't do your line like this. You shouldn't do the lines the other way. No. Do the TA the way that you understand. Okay? You are not going out to exams. No one, is going to come and, tell you that you're wrong or right. You need to you need to adjust, the environment, the charts to your understandings, right? Does it make sense? Now, for the guys that they love diagonals, this is the parallel channel that works for them. Again, pay attention to that 50%. And we're going to break. Remember, always the 50%, even horizontal diagonals, is very important. Are we going to break it, or are we going to lose it? This is the question. So you need to pay attention, right? So that's a little help you that it went from the bottom to the top. That's fine. Now the question is, are we going to continue to the top, or are we going reverse? Are we going down? In the general idea, you understand that the parallel channel is telling you that we are still in a downtrend, right? So we supposed to get bigger legs on the down move. So have a look at that. Big leg to the down, then it takes a long time to get up, right? Then big leg to the down, comes up a little bit, a correction, and then another push to the down. Okay? Rejection on the 50% comes down. Not all the way down to the bottom of the range, it decides to break it. Okay? Rejection on the top of the range. So always remember that little trick that we spoke about the last time as well. So when you have any kind of trend line, if I can draw a trend line here, any kind of trend line, if your price action, right, your candles are below, treat that trend line as resistance, okay, until it comes down and finds another trend line. Okay, let's pretend that you have another trend line there. Then when you're going to meet that trend line, treat it as support. So if price action is below a trend line, treat that as a resistance. Majority of the times you're going to be correct, 8 out of 10 times, because there is a case that the price action wants to break that trend line. It is possible, right? But we're talking about the possibilities and the probabilities. The majority of the time you're going to treat that as a resistance. And the same thing, when price action is coming down to a trend line, either this one or either that one, you're going to treat that as a support. So if you keep that principle always active on your style, then, here's your support. Here's another resistance. Why? Because price action is coming from below. If and when price action is going to break these and be above, you're going to treat that as a support. So you're going to flip it and then head up, and you're going to treat these as resistance. There is a possibility that's going to break. That's a different story. But majority of the times, you need to treat these as resistance until it's going to break it. Okay? You need proof. What's the proof that you have so far? Resistance, 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 a small fake out deviation, resistance, resistance, deviation, and we never came back to this level again. Okay? We haven't come back to this line. It's not a level. It's not horizontal. So we never came back to these areas here. Okay? So step by step, guys. Take it easy. Never mind if you are long-term trader, short-term trader, it doesn't matter. Mid-term trader, swing trader. This is the principle on any time frame. When price action is going to reach a certain, trend line, treat it in the best way for you to have the probabilities on your side. That's it for the bigger picture and the diagonals. Let's go back to horizontals. I hope you like that one, because it's not always one side of the story. A coin has two sides. Let's bring the stuff back. 6 month range. I don't mind about the 6 month range. Rejections and another. Here we are. So it's all good. It's all good. So if you take the Ganga Fib according to the 6 month range, remember how we do this? You go to the 6 month time frame, okay, and you highlight, you break down, so to say, the previous 6 months, or any 6 month candle that has information above and below your current price. So that's the bottom of the 6 month, that's the top of the 6 month, right? And we got that candle, we broke these levels to the down. This is the current level. That's where we are now. So that candle has a lot of information above and below. It's a good candidate. So let's go back to 12 hours, and we marked the 6 month range. And what do we see? We see a rejection exactly on the line, right? 60.5. So let me go to a smaller time frame. Here we are. I know it's got plenty of lines here. Don't panic. Take things as they come. Okay, easy. Spread down the lines. And what do you see? You see you got that top there. We're on the 22 minutes. So here's your top, right? It failed to claim this level. It did not, the price did not stay above. That is the 60,000.5. And it came back, and it's acting as what? As a resistance, right? And it's dropping. So far, what do we have on the smaller scale? On the local area, what do we have on the local area? A high, a low high, a low high, a low high, right? And we came back to the same touch base on the local. What are we going to do here? Right? This is the question. So we need to take these, step by step and see. On the smaller scale, on the short-term base, we need to be careful on that high, which is the bottom of the range. So far, we got rejected. We tried to stay inside, but it failed. It got out, come up, retest, and then it failed. Okay, so now again we can see for the past few hours that Bitcoin is pushing again. It's doing its thing, right? It's trying to go higher, higher. We had an abundant wick here. Abundant wick is when you have a big wick. So it was pushing up, and then you have a sudden sell off. So we have an abundant wick. So we need to see if we're going to break this high, and then eventually if it's going to come back. Let me mark this. Let me mark with a level. That's the top over there. So we need to see if it's going to break this level. If so, it means for the short term it's breaking structure. That it feels that it wants to stop the down movement. This is what it means, breaking structure. It's giving you a structure of a downtrend. When it's going to break the previous highs, right? It's giving you an idea that it wants to reverse. It wants to stop that downtrend. So this is going to be like the question, are we going to stop this downtrend for the time being? Okay. Why? Because it did that a couple of days ago, right? That was a huge, huge downtrend. Here it is. Huge, huge downtrend. And then it decided to go up. And it broke the previous high. So here we have the break of structure on the bigger scale. Okay. It's trying to push up. It fell. It stalled. It ran out of steam. It's coming down. And now the question is, are we gonna hold this as a support, build up structure? Maybe the sellers want to come up and wake up a little bit the bulls and say, hey, we're not finished yet. We're going to carry on. We just needed to catch up our breath to stop all these bear movement, come up, find some support, and then we can continue. Maybe that's the case. But before you see that, you need to take things a bit closer, a closer view, closer time frame, and then take things level by level, one by one, and then understand the structure. Say, hey, I need to break the previous highs, this one and this one, before I can think to target that area. So this is where we stand here today. So maybe today is Tuesday, the second day of the week. Usually Monday and Tuesday are positive days. Wednesday, Thursday are negative days. Usually this is what the market is doing, right? According to the weekly range, so to say. So what is the weekly range? Go to the weekly time frame and trying to find, let me clear all these lines for you once again. No, keep them. I just wanted to hide, to be honest. So let me hide everything. Hide, even that one there. So what is a weekly range? How do you find the weekly range and how do you trade the weekly range? You go to the weekly time frame, okay? You need to find any candle before the current. You cannot measure the current week. It has to be a previous historical candle. And you need to find a candle that has information above and below your current price. Where's my current price? I'm sitting right here. That's where we are. 58.7. Okay? So that's my current price. I need any candle that has information above and below. Why? Because if the market wants to go higher, I need to know where the levels are. If the market decides to dump, then I need to know where the levels are. Okay? So bring the Ganga Fib top to the bottom, double click, and we need to spread it to the left and to the right. Just a little bit. You lock it. Here you are. And now you have the weekly range all marked up. And then you can go down to any time frame you like, 22 minutes, half a minute, 1 hour. It doesn't matter. Why? Because you marked, the weekly range. Here's your weekly range. Here's the very top of the weekly range, and here's the very bottom of the weekly range. And here's your 50%. Look where he found support on the 50%. How coincidence. And how convenient that is. It is a lot of convenient. And what did he do? He broke that level. You see, resistance came back, resistance came back, support. He broke that, wants to retest, and he wants to hold above. Fine. You're looking for longs until when? Until to this line. Step by step, level by level, one by one. Don't rush. Okay? And this is just for today. Based on the weekly range. We just mark the weekly range. All these ranges, all these lines are based on the previous week. That's the top, that's the bottom, and that's the 50%, the red line. And you take the price action, what it's doing now. So let's say that Europe has waken up, they had a coffee, and they're pushing the market up. Okay? Or they're pushing dollar down. Okay? Maybe dollar's getting weaker. And if the dollar is getting weaker, it means that, Bitcoin is going to move to the upside. Okay? This is, the easiest way for you to do your TA every day. Break things down, step by step, level by level, on any range. Do you want a monthly range? Fine, you can do it on a monthly range. Do you want a weekly range? You can do it on a weekly range. Do you want to do a daily range? Do you want me to show you how you do a daily range? Let me mark these as, let me rename this. And I say weekly range. And then I'm going to hide it. Right? No need to delete it. Done. Let's go to the daily. Bring the daily. Sorry about that marking there. So here's my current day. Remember, always you cannot draw anything on your current day. You need to draw your lines based on the previous day. Do I have a candle close to me that has data above my current price? Here's my current price. Okay. 58.87. I got price above, I got price below. That is good candle. I'm going to use that great candle. Break it down. Droop, droop. Here we are. Double click to expand to the left as much as you like. It doesn't matter how much you want. And then a little bit to the right, so you mark your current start, your current level, current area, the local area. Lock it. Come back to your time frame. Doesn't matter what it is. 15, 5, 10, half an hour, 1 hour. It doesn't matter. And here is the chart for you based on the daily range. So here's your daily range. The top of the day, the very lowest of the day, right? And here's your 50%. Okay, and you take it level by level. Now, the daily range, what kind of traders do they use a daily range? Such a small area. Maybe the intraday traders, or the day traders, or the scalpers, right? And you go again, and you go level by level, right? Look at the 50%. Again, the red line is always important. Comes up, rejection, comes down. It did not fail this level, the 57.8 or 7-ish, right? So it hold as a support once, twice, 3 times. Okay, so it's pushing. It broke the 50%. It came back, small rejection here and here, came back all the way down here and reclaimed very quickly. So the scalper or the intraday trader, he can go level by level. All right, if you're going in an uptrend, you know that you have a trouble up here. So you can go, let's say, long from here to there. Once you reach that level, you can take partial profit and then let the trade run if it wants to continue to the upside. And I'm talking from here to there now, right? And to there. 3 levels. This is how you need to make things more simple in your life with trading, because everyone has a different timing. I woke up this morning at my time zone. This is what I see now. This is what I see now. This is my local area. Someone that is, he's for let's say the Asia people. Their timing, it was around 2 o'clock, and my local time 4 o'clock. So that was Asia session, and their timing, it says that the market wants to go down. So the Asia people shorted it, the opening of the Asia, the closing of the Asia, and the opening of the European session, they're pushing up. Both traders did well on both directions. Asia saw an opportunity to short, and the closing of Asia and European session, they saw the opportunity to go up. It doesn't matter. Okay? Market goes up, market goes down. The thing is, where you are as the timing. Are you at the time that it needs to go up, or are you on the time that it needs to go down? So don't be upset if someone posts a couple hours ago on Crypto Banter or in the web room, and they decided to go short, and you woke up this morning and you see all these short trades and everyone got burned. I'm like, why everyone got burned? Because the time that they posted, they probably saw this rejection, but now it's too late. That is done. It's finished. The market reversed. Okay, so that trade is not valid anymore because of the timing. So always remember that you have a timing that. Let me see a little bit of the chat. Hello, Thalys. What confuses me a little bit is when I look your BTC chart now on the 22-minute is where do I take a trade? Okay, again, timing. When you, let's say this is a 22-minute time frame, okay, and this is Bitcoin, and this is the levels based on the previous day, the daily range, okay? You need to understand that you are currently here, and you need to wait. If you want to go long, you need to wait until you claim this level. You cannot trade in the middle in between two lines, so to say. You cannot trade in between two lines to try to go long or short because you are very close. You need to be on the line. So timing, okay? Again, timing is a game, it's a game of timing. So you need to go down, to the lines. I'm going to spread up a little bit the lines, and you need to make sure that you need to wait and act on the line, okay? Either that line or that line, okay? So if you have, let's say the local area is telling you, hey, we're going up, this is an uptrend, right? What kind of setup you're looking? Well, if you're scalping, obviously you're looking for longs, right? Until when? Well, until the big line here. What do I see here? Rejection, rejection. So I don't know how long it's going to last, that up long. Okay? So I don't need to jump here for longs. I need to wait until it claims and make sure that it's flipping that level from resistance to support. If you find a support, then it's a good time for you to go long. You do not build a long position on a resistance. Okay, if that makes sense. So I hope I've answered your question. Is wait until you claim a level, treat it as support. Resistance, support. Okay, you flipped it. That was a good time for you to enter. And then you check mark each level. You reach that level. If you're a scalper with high leverage, I'll say, I don't know, maybe 30, 40, 50x, right? You just go from this level to this level. 50x will not be a trade for a few hours or days, not even. It's going to be minutes, okay? The 50x is going to last only for a very limited of time. It's very risky. You need to make sure that you don't expose yourself to a high risk, okay? So scalpers will go from one level to another level, something that is guaranteed. Well, high probability, so to say. Nothing's guaranteed 100%, but you understand what I'm saying here. It's like high probabilities, high chances. So what are the chances to get all the way up there? Well, it's like, it's like the elevator. You start from the ground and you need to go to the fifth floor. Well, before you reach there, you need to go to first, second, third, fourth, until you reach the fifth one, right? So take it level by level, right? Grab, check mark here, say, okay, I see the support. Maybe I'm going to hold that level. I'm going to go up and, see what's going to happen. If it's going to find a lot of rejection, a lot of resistance, then maybe you have the feeling that, okay, it's rejecting. I don't see that it has a strength to go higher. I'll grab my profits, bye-bye, I'll close it. What was the percentage? Not a lot. It's a daily range, right? It's going to be 0.4-ish. Well, times 50? If you do that times 50, it's like 20%, right? It's not going to be bad. 20%. Remember, when your daily target is supposed to be 20%. Right? Okay. Compounding. The power of compounding, but let me speak about the power of compounding. Because we need to master these kind of games. Okay? What do you need to master? You need to master the skill of you to do your own analysis and trying to see what the chart is telling you, right? By breaking down in lines, it just helps your brain to understand if you, where are the start and the end points, okay? And you go level by level. Another thing that you need to master, your trading style is you need to compound, okay? You're going to start with $100 and then you're going to compound. Now, if you target 20% per day, every day 20%, that means you only gain $20, right? It's not very exciting, but as a percentage-wise, it's fine. 20%. Who's going to give you 20% per day? None. So the next day, you're going to start with 120, right? Which means your original capital plus your profits, your yesterday's profit. And then you're going to target again 20%, okay? So on day 2, you're going to make $24, right? Not very exciting, but still 20%, okay? So the next day, day 3, you're going to start with 144. So this is like compounding. You're increasing your trading size. Okay, so I have the tools. I'm going to share these tools once again. So let me bring. Let's go to the drive. No, that's the plate. Sorry, you moved down there. You can bring Gemini up there. I'll leave the email there, and let me bring the drive up so I can find it very easily. So here it is, drive. So let me go to my drive. Here's the tools that I have. Compound. So once you go to the compound, here's the table of compound, right? You can do it very easily for you. You just add the number that you have for you to trade. What's the amount that you have for you to trade without worrying? Maybe it's 200. It's fine. So here's your 20% per day as your targets, right? So it means that the first day you're gonna make 40%. Here's the profits, only the profits per day, $40, because you traded $200 and you made 20%. So the next day, day 2, you're gonna start your trading with 240. The day after, 288. The day after, 345. Why? Because you keep on adding the 20% of the previous day in your capital. So this is compounding, right? If you keep on doing that for a month, you can start all the way from 200 and then you're going to reach 7,000 after 20 days, which is a month, right? All nice, sounds very nice and good. I know. It's not always like this. The market's not always perfect. I'll give you the links as well. I'll give you all the links for you to have. But if you go to what's your target, which is another nice table, just for the new guys, very quickly to explain, if you haven't seen the previous video, how to understand this tab, you need to find what are your expenses, because you need to find your targets, right? You need to know what is your daily target, and how do you find this? You need to put your numbers right. You need to find what are your monthly expenses. Every individual is different. Everyone has a different number. Don't try to match with somebody else, right? You are unique. You have unique needs. So you live in a different country with the rest of us. So you have different needs. Someone is married. Someone has 1 kid. Other people have 3 kids. Other liabilities. So the expenses are going to be different. But add them up, everything. Your rent, your mortgage, your loans, your finances, your utility bills, your food, your clothes, everything. All the money that you need every month. Put them up there, add them up. Okay? Someone maybe have 1,500, someone maybe have 1,700, someone else maybe have 3,000. It doesn't matter what it is. Okay? Now, if you do this, if you find that number, you dial it in, and then it's going to give you what is your target. Now that yellow there is going to give you a target to try and to understand that not everyone, because everyone believes that they only need to become a millionaires. Millionaires for them to start believe that they're going to be independent. You don't need a million, right? You need a million, under a million if your expenses are 3,000. If your expenses are 1,500, you need less than $500,000 for you to be independent for the next 24 years, 25-ish years. $500,000. A lot of people believe that they should target $1 million, $2 million, $5 million before they become financial free. No, you can start with 450. Of course, you're going to increase it, but you need to start with 450, not millions. So you need to lower your standards, the belief that you need to have $1 million before you become, free. No, you can do that with 450. Okay, so whatever that number is telling you is your target before you become financial free, and then you need to put yourself into a spot to break it down. In how many years do I need to reach that target? Because a lot of people say it doesn't matter what number it is, $500,000, $1 million, it's a number. Now, if I tell you you need $1 million to make $1 million before you become a millionaire, financial free, then people will say it's too high, it's too far away. I cannot make $1 million when I'm trading with $250. How it is possible for me from $250 to go to $1 million? It is not possible. So that's why I say make a business plan, right? Treat it as a business. Give yourself time to reach that target. So break it down into X amount of years. I put 5, a generic 5. This is what usually business plans do, right? The lowest number you can go as a business plan is 5 years. If you go to a bank and ask for a loan, and you tell them that your business plan is 3 years old, like you can reach your target, the return on the investment is going to be in 3 years. I don't believe it. They think you have your numbers right, and they will not give you the loan to you, right? But if you give them a reasonable time, like 5 years, and then they will see that it is possible, it's doable. Back to the numbers. So your daily target, if you break this down, from $450 per, for you to become financial free, break it down to 5 years, it means that you need 90K per year. Now, not all people, I'm talking in average here, not a lot of people can make on a day job 90K, right? A decent job, well, let's say average job, even in the UK, is around 20K, 20, 23, 24K maximum, right? And maybe, or we're evaluating here, but around that number. So 90K is still a big number, right? But if you break it down, this formula is going to break all the numbers down for you. It's going to come down to 346 per day or 1,700 per month, right? So that's your target now. If you do that daily, okay, for 5 days per week, 20 days per month, if you do that daily target, you're going to reach the 450,000 within 5 years. But before we're going to reach that big number, how do I reach the 346, the daily target? And this is going to go back to the compound table and say, okay, how much do I have to trade? $200. Okay. How long is going to take me to reach, how much was it? 346. How long is going to take me to reach a profit of 346 per day? So it's going to be on day 13. So let me highlight that for you. So on day 13, you're going to reach your daily target. So you're going to start with $200. 2 weeks later, by compounding only 20%, right? In 2 weeks, you're going to reach your daily target. Once you reach that target, you can stop compounding on your trading size, and you should start compounding on your capital, right? And how do you do that? I mean, you're trying to take that 20% per day to increase your trading size. The first day is going to be 200. The next day is going to be 240. The day after, 288. For you, in order to make $346, to break that barrier, the daily target, remember, daily target, 346, you need to have a trading size of 2,139. So you start with 200, and every day you compound 20% until you reach 2,140. And once you do that, then you can make your daily profit of 356, which exceeds your daily target. So it's going to take you 2 weeks. If you start with $200, it's going to take you 2 weeks until you reach your first daily target. After that, you don't need to compound, right? You're going to stop compounding that 20%. So you're going to keep on trading with $2,140 every day, right? And still target that 20%. That means after 2 weeks, every day that you make $356, you're going to put this money back to your wallet, not on your trading. So every day, right, you're going to after day 13, after day 14, so to say, after 2 weeks, you're going to stop compounding. You're not going to increase your trading size. And say here on week number 3, after the second week, right? Week number 3, I'm trading with $2,140. And you start again from the beginning. So let me remove that. Reset. Here we are. So you start with $2,140 on day 15, so to say. And you still target 20% per day, right? So that means the first day you're going to make $428. Guess what's going to happen with that money? Straight into your wallet. The next day, you're going to trade again with $2,140. How much are you going to make? $428. Guess what? All that profit goes to the wallet. Day 3, you're going to still trade with $2,140. Day 3, you're going to make another $428. Guess what? That goes to the wallet. So what are you doing now? You're compounding your capital. You stop compounding your trading size. You have a fixed amount. You stop that. And then all the profit goes back to the wallet. And you just throw money into the wallet. Every day, you're going to have the same starting point, but you're going to stay there. Are you going to meet your daily target? You exceeded your daily target. Your daily target is supposed to be 346. You're making 428 now. So what are you doing? You're compounding your wallet. It means that you are exceeding your daily target, and you're going to exceed your weekly target, and you're going to exceed your fortnight. All the targets are going to be exceeded. So you are moving towards your big target, which is $450,000. How are you going to do that? By compounding your wallet. You throw money into the wallet. You need to make that money and save $450,000 for you to become independent, right? Now, let's say you keep on doing that for a few months with a fixed amount of $2,140. 3 months down the road, you say, hey, I saved a lot of money on my wallet. What if I do a step up? Instead of $2,140, right? One day I'm going to use that $428. Instead of going to the wallet, I'm going to put that $428 into my trading size. I'm going to do that once, okay? So if you do that, then you're going to look for 2,675. So after 3 months, you decided to increase a little bit your trading size. Now your trading size is 2,645, and look how much you make per day, 500, right? Only one step up, and you go to 500 per day. What are you going to do? Throw that in the wallet. The next day, throw that in the wallet. You're not going to do that. For 1 month, you're going to trade every day with $2,675. Every day you're going to make $500. You're going to put that in the wallet. The next month, one step up. Hey, I'm going to trade now with $3,200. $3,200. And then your first day is going to be $640. What are you going to do with that profit? Into the wallet. You're going to compound the wallet, the savings account. You need to save the money, right? You increase every month one step up. You increase your trading size only by 20%. Now, a lot of people will get greedy, and I'm sure that if they made 10K by the end of 2 months, 3 months, and made 20K, I'm sure that they're not going to put 3,000. I'm sure they're going to go like crazy. Hey, I've got 20K. I'm going to put down 5,000. You need to remember one thing. By compounding your trading size, of course you're going to compound your winnings, but also you need to remember the danger that you're compounding the losings. So if you risk one, either you're going to win one or either you're going to lose one. But when you compound that one, and eventually down the line, you're going to make that one as powerful as a 5. So you're risking 5 to compound it, right? So you're risking 5 to win 5, but you may lose 5. What I'm trying to say here, let me demonstrate that a little bit. If you're trading with $1, right, and let's forget about the ratios, we're going to say either I'm going to win $1 to make it $2, So I double my account, right? Or I'm going to lose that $1 and go down to zero. Because you're trading very small, your winning and losses are going to be small. When you increase your trading size, it's going to take you a lot of time for you to go from 1 to 2, from 2 to 3, from 3 to 10. It's going to take you like 10 steps, right? Once you reach step 10, you need to remember, if you risk 5, two things can happen. Either you're going to win 5 and make that 10, 15, or you're going to lose 5 and make that 10 back to 5. It took you 10 steps to get to 10, but 1 step to get you to 5. Because of the power of compounding. You can compound very quickly to the upside, but also do remember that you can compound to the negative very quickly also. So don't be greedy, go step by step, and also make sure that the ultimate target is not to compound trading size, is to compound your wallet, right? Because in the end of the market, when you decide to say, I want to get a better car or a better house, you need to have money, right? You cannot have always the risk increasing the trading size and have all the money in a trade. You need to pay yourself. It's a business, right? You cannot have all the money always 24/7 into the market. You're going to use the money to make money. But when it makes money, you need to remember that you need to pay yourself. You need to get a paycheck. By the end of the month, you need to pay yourself. Remember, you have expenses. Every month, you need to take out your expenses. Also, plus the things that you need, right? And then it's going to take, it's going to take some time, but it doesn't matter if it's a bull market or a bear market. Remember, we need a movement. It doesn't matter which way the movement is. It's up, it's fine. If it goes down, it's even fine as well. The only negative of the downside, I spoke about that before. I mean, if we go to the bigger time frame, you can see. The only negative about the downside is, I'll do that with a box. Here it is, a little box. If I want to go up from here to there, I make a nice 274%. But if I decided to go down, I only go down by 70%. So you make more money on the way up rather than on the way down. Okay? But you still make money on the way down. Not as much, but you still make money on the way down. Okay? Why is this? It's not a cheating, it's not the market, it's how the percentage is working. Right? So if I have $1, for me to make it to $2, it means that I increased it by 100%, right? I double the account for $1 to do. But if you start sorting from 2 to come back to $1, right, you just went down by 50%. Why? Because 1 is half of 2. Same numbers, same range, from 1 to 2, 2 to 1, but on the way up is acting 100%, on the way down is going to act as a 50%. It's exactly the same principle, right? You double on the way up, you half on the way down. And when you are in futures, you are betting against the percentages. You make money against the performance. So on this way down, we'll still make money a little bit less, right? Not as exciting as the bear market. The one way for you to tackle this and, say, why do I make less money on the way down? It's fine. It's fine. What you're going to do is have a little bit higher leverage on the way down. So maybe on the way up, you have a leverage of 10, so to say. And on the way down, you may have a leverage of 20. And this is how you're going to battle a little bit, the negative side effect, that you make less money on the way down. And you're going to be fine. So it doesn't matter what the market is doing. If it goes up, fine. If it goes down, still fine. Why? Because I have the levels. I see the direction. I follow the direction. It was quite funny today because we had a meeting, a well-room meeting. And the guy said to me, okay, Alice, what do you see on, how Bitcoin's going to do because you are the bear in the war room? I said, no, I'm not the bear. Why I'm not the bear? And I said, okay, hold on a minute. Okay, I'll take that back. Okay, yes, I am the bear. Why? Because I always say, don't be the salmon. So don't be the salmon, be the bear. Right. It was a point of a joke there. Don't be the salmon. So who's after the salmon? The bear. So yes, I am the bear. I'm after the salmon. Don't be the salmon. Don't go against the flow. That's what I mean. Don't be the salmon. Don't go against the flow. You need to go with the flow. Okay. So if it's uptrend currently, a short term up, it's fine. You go level by level. That's it. Okay. If it wants to turn around, don't fight it. It wants to go down, trade it downwards. Okay. Right. I hope you understood all of this. Let me bring the chart here so I can see what you say. Is the US probably will go down based on this range? No. The range will not predict the direction. Don't mistake in that. The levels are there to help you for you to move one level to another level. How do you treat the levels? As a support or resistance, okay? So let's pretend that you're here and the market is going up, right? So you're going to treat this as a support when the price action is above. And then it's good for you to start thinking on long. And then once you go up, you need to treat the above levels as resistance. A possible rejection here, a possible rejection here, a possible rejection here until we get proven otherwise. If I get price action goes above and stay above this line and then continues, then you can say it's a checkpoint, right? We passed that checkpoint and we're going to the next resistance. What the price is going to do? It's going above, stays as a support, and then it continues. Then it's another checkpoint. Choop. It's good. So when it fails and comes down again, and you're like, uh-oh, what's going on here, right? And then it drops, that is the point of invalidation. And you say, uh-oh, I'm closing that trade. Why? Because it lost that level. If you're in an uptrend, you're not losing levels, you're gaining levels. You go from one level to another. You're not losing levels. If you're losing levels, something's going wrong. And then you need to close a trade. So the lines are not there to predict the direction. It's just to make you stay focused and in track. And you say, I need to validate this level. Does it go above? That, so far, is a rejection. What do you need to see? You need to see the price come above. If not, then it's going to come here and it's going to be the uh-oh moment. Are you going to treat this as a support? I am. What the price is doing? Oh, losing it. Close that, shoot down. Right? Why? Because it failed to gain this level and also we lost that level as well. You got two evidence. You got two events going on here. You don't need a third one. You just close the trade. If you haven't got an open trade, then it's time for the short people to say, hey, we failed to go above this line and we lost that support, so we treat it as a resistance. We're dropping down and we're going to this level and then this level and this level until that correction is over, until we turn around. And you go level by level, leg with leg, a down leg, correction, and down leg, consolidation, trying to push up. And this is a question: is this a correction like this one and we're going to have a big leg to the downside, or is it going to be a reversal? We're going to wait and see. But until then, you just go level by level, step by step. So the lines are the starting and the end point and the invalidation point, the check marks. Are we getting above here? Good, check. Are we going above here? Good, check. No, uh-oh moment. And then you are prepared to close a trade, or you are preparing to short. Right? This is how simple you need to keep things. less noise as possible. Don't be biased by anyone. You know, you don't need me to tell you, because I woke up, how do I put this down? I woke up now and I see bullish, okay? And you are in Asia and you're going to wake up a few hours later and you're going to listen to my message, but the market by then is shifted and you're going to listen to an old message. So you don't need to be biased by me or by Carl or by Sheldon or by Ron, by anyone. You don't need this. What do you need? You need to see the chart on your own time zone, on your own timing, on your local area. You break things down to any range. Do you like the daily range? You can do it. Do you like the weekly range? You can do it. Are you a long-term trader? Break it down to a yearly range. Can you do a yearly range? Of course you can do a yearly range. It is possible. I'm trying to make things as simple as possible to everyone. So let me rename this. Rename daily range. Here we are. Hide that. Go to yearly, 12 months. Here we are. Here is the current price. Okay, that's a tough one now. Here is the current price. I cannot use the same candle, right? Do I have any candle that has some information above my current price? Yes, I have this candle, bottom and low. So that's the candle that I'm going to use. That one. Okay, break that down. Very top, very bottom. Guess what? Double click. You know the routine. Drop it to the left, drop it to the right. One more click. Here we are. Lock it. Now go down to your daily time frame, your long term. Here's your levels. Here is your yearly or 12 month. 12 month range. There we are. Doom. Did you got renamed here? Oh, beautiful. Got renamed here then. Okay, fine, cool. So here's your 12-month range. And here's your 50%. The big zone, the 48. Okay? Look at that. Treat it as resistance. It broke it. And we kind of retested there as a support, maybe. And what do you see? A small deviation above this level, and then you lost it. Look at these levels. Look at these levels. And then another level here, another level here. Rejection, rejection points, rejection points, rejection points, rejection points, rejection points, rejection points. What do you see here? Let me clear all this. Here we are. What do we see here? That we try to claim this level. Let's say that it bounced from here, found support, and it's trying to go above, and it lost it. Oh shit. Are we going to treat this as a support or resistance? That's a key level on the yearly range. And you need to watch and see. Are we going to treat this as a support and head up? Or are we going to treat it as a resistance and come down to this support? Look at the bodies. All the bodies are above this line. So this level, what level that is? 53.5 is a very key level based on the yearly range. I see all the bodies close above this level. Price trying to come close to this level, got rejected. Came a bit lower, deviated a little bit, came back, close above. Here, bodies above. Okay, so that's a very strong support. So if you're going to lose that, let's say that today and tomorrow the price doesn't go above, does not claim, does not gain a level, then you can short it all the way down to 54, 53.5. All right, on the bigger picture, because you're doing now, this is like a long-term or swing traders. What do you see? High, low, highs, high, like a double top there. Low, high, and maybe possibly this is a new low high. You have a common support here. And what do you have? A descending triangle. And when you tap the same level over and over, what does it mean? When you tap the surface of the eyes multiple times, it's going to crack, right? It's going to crack, it's going to open, it's going to drop. You can do it yearly. Why not? I miss the entries. I don't sleep because you're in the US. You don't need to listen to anyone. All right? Break down your own chart. It doesn't matter what it is. Bitcoin, Ethereum, Zero, Popcat, Solana, Phantom. You don't care. You name it. You're going to break that chart according to your style and your availability into the market. Can you do day trading? Do you have a lot of hours per day to trade? Fine. Do them weekly. Do them daily. You don't have a lot of time. Okay, break them monthly, 6 months, 3 months, 12 months. It's fine. You can do it. Break it down and then you go level by level. The principle of the conditions are always the same, right? All these levels, you're going to treat them as a point of validation or invalidation. Is your point of action levels. Yeah, you can scalp the Gangster Film. Of course you can with a low time frames. So you check the higher time frame for trend direction, right? That's correct. Always I start with a daily 12 hours to see what the market is doing, what the direction is. And if I get the direction, let's say it was a downtrend, which it is, I have, let's say, I look for short setups because I know that the shorts, they're going to have a big explosions to the downside, big legs, right? Slow to the up, fast to the downside. So on a short market, of course, the big legs are going to be the down legs. So yeah, direction, it has to be, it has to be very, very careful to find the direction correctly. I'm reading the messages. Which lower time frame do I link to the monthly range? It's down to you, bro. There's no fixed low understanding. Why? Because you may come to, let me bring that. Let's bring to the monthly. You may have a monthly candle that is small, like this, right? And then you may have a monthly candle that is huge. So I cannot have a fixed answer to this because the candles, they have different ranges every time. They're not always the same. So you cannot say, oh, you start always with a monthly. No, you need to evaluate where you are right now, switch that monthly time frame or weekly time frame or whatever time frame you want to choose, and then see the candles. The principle is, where is my price right now? And I need a historical candle, historical data that has a range above my current price and below. Why? Because I don't want surprises. I want to mark out my levels above and below so I know what the market's going to do. If it's going to go up, where my next resistance is going to be. If the market's going to go down, I need to know where my next support is going to be. So I don't want any surprises. So the candle that I'm targeting, it has to be anything that has a lot of data above and below. Here it is, based on the previous month. I'm going to hide this. Here, hide, and then this is my monthly. Bring that to the left, bring that to the right, done, lock, I moved it, sorry, lock. Go down to your daily, whatever time frame you want after the monthly, and here you are. Here's your levels. And trying to understand what the monthly range is giving you. And you say, okay, this is the bottom of the range, this is the top of the range, this is the 50% of the range. According to that monthly, we broke above the 50 and we acting as a support on the 50. It's a downtrend, yes, but I'm on the 50. All right? You don't need to listen to anyone, you don't need to follow to anyone, you just break things down to your own understanding. All right? your own time frame, your own timing. It doesn't matter, right? If now it's too wide, let's say that you marked the previous month, you don't want to touch that Fibonacci. It's fine, the Gangster Fib. And you want to, today, let's say that you have a lot of free time and you decided to go a smaller time frame. You want to go down to 5 minutes, right? And here's your 5 minutes and you have no lines. And you're like, oh shit, where are my lines? Oh, my lines are too bright now, too far away from each other. That's fine. You don't need to delete it. Follow, use these two lines as a lead and take again the Gangster Fib and break this down from one level to another level. And now you have a 5 minute Gangster Fib based on the monthly level, right? Here's your monthly level. Let me mark this. Here's your monthly level. That's your 50%, the red one. And you just break it down into a smaller time frame and smaller levels. And trying to understand what the price action is doing with these levels. Rejection points, rejection points, rejection points, rejection points. Look at that, right? And you go level by level. On the 5 minute, you are long. That's fine. On the bigger picture, you are short. Still fine. No need to, be confused or anything. Different time frames, different styles, different directions. It's fine. That's why Alice is driving a BMW, right? Yeah. Proper money management. It is. It is recorded. It should be. It's automatically. Yes, it is recorded. We are past 1 hour, 12 minutes. Yeah, I got scared there. It happened to me that before that. I thought it was recording. It wasn't. No, it is recording. And it is going to be uploaded, of course. I'm sorry about my accent, guys. I have a mixed accent. It's not a clean English accent. My mom is Australian, so I wasn't raised up in Australia. I was raised up in Greece. But yeah, my accent is a little bit mixed. I'm sorry about that. If I confuse you in any way. Do you need to wait till you candle close? A little bit, yeah. I mean, you wait a little bit. It depends your time frame. Yeah, 4 hours. It's going to take you a long time to close that candle. But yeah, you need to see what's going to happen with the closing and the candles. Next candles next to it. If you see a movement, if it's moving, then you treat that as a support. You don't need to wait 3-4 candles until you understand that it's a support, right? You have to fine-tune yourself according to what the market is giving you. My apologies, Alice, I'm new here. Welcome. Where do I find the Gangster Fib in TradingView? Gangster Fib. Okay, Gangster Fib. Very quickly, I'm going to give you, where do you find it? In Fibonacci, right? You draw a Fibonacci. And once you're going to draw a Fibonacci, it's going to look like this, right? Not like this, but let me do default. It's going to look like this, right? It's a Fibonacci tool with Fibonacci sequence numbers. We love Fibonacci, but we're not using these numbers, right? So we change these numbers and the style a little bit. We remove the trend line because too noisy. We remove the background, too noisy. Okay, we move the labels to the right or the center, whatever you like. Okay, to the right. In the middle is fine. You can change the text style. It's up to you, your style, right? But we change the numbers. Okay, and the numbers are, I have this on a template. Here are the numbers: 0, 0.25, 0.5, 0.75, 1. So you can notice that we break down into equal 4 levels, basically, right? Quads, quarters, 0, 0.25, 5, 0.75, and 1. These levels now, 125 is in the between the 0 and 25. So I split into 8s, so to say. That's why my template is called Gangster Fib 8. So I break down things into 8 equal levels, right? 4 to equal 4 levels. If I put 8 is down to equal 8 levels. 8 levels helps a little bit more people to understand, right? It makes the levels a little bit more narrow. And then I have the extension. It's when and if I'm using this extension. It's when and if I want to see whether there is a possible next resistance to a chart that has no historical value. I mean, what do I mean? I mean, when the chart goes up and up and up, and you have no historical, no data, if ever, let's say that price action did reach 61.25. So for you to, if that is the all-time high, when the next resistance is going to be, it's giving you an idea where possible the next rejection may be. Okay, giving you possibilities, not surprises. I don't like surprises. If you go to my Excel sheet, which I give out free, go to the second tab, and I have the Gangster Fib here. And Gangster Fib is the up version of Gunbox, the people that remember me all the way back. It's a Fibonacci tool, and here are the numbers, all the numbers together, and the colors that I have, right? You don't need to have the same colors, you have your own style, just for you to understand what I'm doing here. So 0 is my 0% green. Everything is in gray until I reach the 100. The 50 is always red, okay? And the next 150, which is again the 50 between 100 and 200, halfway is again red. So these are the colors, these are the percentages, right? And here are the values, what you need to put here in the boxes. So go to my Google Sheet, and you have everything there for you. Okay, so you don't need to panic. You didn't have time to write down. Okay. Thank you very much. You're welcome, you're welcome. You're half Aussie. Oh, good. Yeah, half Aussie. Basically, I'm half Greek, half Scottish, because my Asian blood comes from Scotland. Canimera. I'm new here, but I'm not new in crypto. That's good, crypto lady. You're welcome. You're welcome. There's no shame if someone is new here, right? You know, be brave and come up and say hi. I mean, we're all equal here, so to say. I like your strategy. Okay, I'm reading the messages, blah, blah, blah. When you use the Gangster Fib, what time frame you use it to the most of the best win rate? Ah, that's a nice question. Which time frame is giving you the best win rate? Oh, nice. Okay, that's a generic finding, right? That doesn't mean that you need to all of you need to go to that time frame. That was a school experiment that we done way back in cohort 1 and 2, and we're trying to identify which time frame is the most profitable, and we found it was the 4-hour. Okay, that is a general rule. That doesn't mean that you need to trade on in the 4-hour. Okay, don't go crazy about that. Because in the end of the day, you know, what improves the win rate? Is it the time frame, or is it your strategy? And the answer to that is your strategy. Okay, for you to increase your win rate is the breakdown. This is the breakdown that I found that it works the most and the quickest. Okay, I'm not saying that it's a perfect example here. I'm not saying that this is a perfect strategy or approach. This is the approach that I found that it works very fast and and very accurate. Now, what separates us from other traders out there in the world? All right, we're not alone. So what separates us with this kind of strategy here is you have the milestones, the checkpoints. All right, so these checkpoints is going to give you a easy warning sign when things go wrong. So you have an uptrend. It goes up and up and up and up. If I don't have these lines, so let me hide this line. I'm going to hide everything today. Hide and seek today. So if I hide this and you have no lines, when is the time for you to say that it's turning around? How do you going to notify yourself, understand, and make the decision that it's enough? It cannot go any higher. It's running out of steam. When is the invalid point? In the sniper school, they usually say, we all did on the sniper school. I did the sniper and the world school and the crown school, everything. So what we usually say to the newbies, oh, you need to break the trend, retest the trend, and then you know that things are turning around. Okay, so you had an invalidation point of what? Of two events: a break of the trend line and a retest of the trend line. You needed to wait for these two events for you to say, oh, it's invalid. Okay, and that is on diagonal. I found that that is a bit too slow. It takes a lot of time to break the trend line and then retest the trend line. And what if it doesn't retest the trend line? Price action moving, goes, and you're waiting. No, I'm waiting for the retest. No, it's going to come back. Well, no, wait, it's coming. It's not coming. It's never coming. It just when it goes down. And before you know, the price is already down here. And you're like, panicking. You're like on the red. So I said, no, I need to find something that is more consistent, more solid, more valid. So that's why I came with the horizontal line. So where is my daily range? Do we do the daily range? Yeah, we did. Here we are. So my lines are giving me a heads up when things turn around bad. When I'm going to break this and lose it. When I lose that, then it's bad news. I don't need to wait a break of trend line. Let me put the trend line as well here. And now it's a lovely trend line. So I don't need to put a trend line and wait for the retest. If I lose that, it's bye-bye. That's the difference. Okay. So for you to increase your win rate is for you to go from level to level. It's not the win rate is not about your time frame, it's about your invalidity levels for you to see very quickly when things are turning bad and for you to take action. That's it. Right? And possibly here, right? Possibly we're going to range a little bit. We're going to see some cluster. We're going to see a small range. Okay, and then we're going to see an action by the looks of it, right? We had a nice little pump, and now it's 12 o'clock. It's the time that people are going to have some lunch, and they're going to hold a little bit. So where is the Google Drive? Okay, I'm going to post the link again. Can I do something in Zoom that everyone can see that? Not on the chart, maybe. I don't know. I'll seek about that one. Here we are. Let me share the screen. Let me share the link. Sorry. Here we are. Copy, paste. Yeah. Ta-dum. All yours. Here we are. You're welcome. Is it possible to execute a trade on a schedule? I won't do that. You could. I mean, you can. I mean, you say it's not scheduled on time. You schedule on level. It's a limit order. You put a limit order and say when the price is going to break the 58.6 or 58.7, please go long. All right. And you're slipping. You have a trigger here. Price action goes up. The exchange will execute your trade, and then that trade comes down, and you wake up in the morning, and you open your application, and you see that there's no orders yet there, and you're like, yeah, of course I'm in, and then you see that the trade is not there. It's like in the red, in minus, it's gone, it's closed, and you're like, hold on a minute. I had a limit order. The limit order is not there, but the trade is not running either. And then you go to the balance, and it's like, oh shit, I lost my trading size. The money I put in the trade, what happened? Yeah, no, I don't do that. I trade only when I'm awake. Okay. Only, if you do day trading and scalping and stuff like that, you have to babysit. If you do long-term trades like weekly, monthly, yeah, fine, you can sleep, but you don't put limit orders on your sleep. You're already in the trade in the long term. So what the go to YouTube and see I shouldn't say that, but I mean go to my YouTube channel here, right? Okay. I don't know promote my channel, but go to my YouTube and go into my you have the Sniper School have the Sniper School playlist, and the War Room guys have the War Room playlist. I have different playlists for you guys, okay? So the Crypto Sniper School playlist, I have videos there, right? It's a playlist, one link for everyone to find. And on the very bottom, as it goes down, you're going to see all the videos that I post. Okay, and you can see the date as well, and a little small title, right? What I do. Go to the last video and see, the last one says, do what investors do in such times, right? And then I explain everything in there. I explain everything in these videos, but I know these are very long videos, but, just go on 2x speed. Ignore that 6-hour session there, ignore that 4-hour session. I do these now, and then quite often. Yeah. I haven't broken my personal record lately, so I need to do that once soon, maybe. I'm gonna do that. I'm gonna break my record, which is 8 hours straight. I'm gonna do that with live trading. So instead of teaching, I'm gonna do trading. So yeah, the Sniper School, you get the link on the Sniper School. The War Room, you get the links on the War Room, right? War Room may have a little bit different videos because I do things inside the War Room, so that is down to the War Room. Okay, doop, doop, doop. So you have the playlist. Go over there and have a look. I post the links. Every time that I upload a video, I post the links into the corresponding server. Don't worry about that one. Yeah, we're gonna do trading. This is my final week with my day job project. Finally, it's coming to an end. We're gonna finish that track. It's gonna be finalized. Thank God. We're gonna start trials on it, but I'm not gonna be like 12 hours in there. And that means I'm gonna have more free time in the War Room and the school, and I'm gonna do live trading. Now, live trading, I'm not sure if I'm gonna do it on Zoom because I don't want to hold the school Zoom account active for 8 hours, and people want to go in Zoom and have a go at me. Maybe I'll do, I don't know, maybe I'll do on YouTube. I'm gonna do a private YouTube live for 8 hours. Have you updated the trading journal? Where did I left that? Let me have a look. It's not. I mean, it's not bad. You can still work with it. It's not going to be. The majority of stuff is working here. So I guess I can delete that. Reset. Break that down and break that down, and it's going to be fine. Yeah, you can use it. You can use it. I'm gonna do some more stuff there, but it's gonna be like maybe I'm trying to make a dashboard, maybe something more lively to give you a little graph. How is your profits doing? Maybe give you a little graph the past 10 days, 20 days, and see how your profits going up and down, when it went down, when it went up, stuff like that. When I have more time, I'm gonna do more lovely bits into it. Yeah. Also remember, do the links. Remember how you do that. You go to the training view. You do a little setup. Let's pretend that we're doing a little setup here. So I'm pretending that I'm doing a little setup here, and I'm typing there. And this is my stop loss. My stop loss is under the line. Remember, right? You lose that line, it's out. All right. So let's pretend that you are long, and then you go to your exchange, you take a screenshot of your trade percentage. Maybe, you know, you have a little towel here and say that you're up by, you know, 15% because you went on a 2x, blah, blah, blah. Put a little towel, screenshot that, and then you do a link, right? Copy the link and paste that link inside your trading journal. Then you can delete that, it's fine. You can delete everything, but the link will keep all the data intact. And let me give you an example. So if you click that link here that I have from previous session, it's going to give you the screenshot, right? How I did it. And that was injective. This is like the setup, and this is my little towel that did a screenshot from the exchange. And you always keep that as a reference, as a record, you know. You're going to remember, you know, you can't be possible to remember a week later or 6 months later, but if you do a screenshot, it's going to remind you. Okay, something like that. So you can keep all the links up here. Something like that. That'll give you an idea to keep things organized. And also, you can keep anything here. Let's pretend come to the object tree, and you want to have your setup, my long position, right? And let's pretend your tile, everything together in a folder, and say this is my setup or trade. Don't put numbers, just put dates. The 17th of September, right, 2024. Now you make that nice little folder, right? And then that folder, you can hide it and all gone. But when you need it, it's all there, right? Did I make another example the other day? Maybe on injective. Where's injective? Injective. Do we have? No, it's not in that injective. No. Did I delete it? Maybe another injective. I don't know. Don't remember. Where was it? Where was it? Hold on. Let me find it. Where was it? Injective in where? In Bybit. Okay. Let me see. Do I have? Is that Bybit? Yeah, it is Bybit. So probably I deleted it. Okay, fine, no problem. It's not here, so I deleted it. But yeah, you can keep all the data up here. It's up to you. You can keep it and always come back anytime, right? Have a nice and clean charts. Oh, nice, lovely. Here we are. Vatican is moving. They came back from lunch. No, it's 12 o'clock yet. So you see, it's rejecting to this point. It's quite funny. I mean, you know, these levels, how they, you know, how price action is treating these levels. Now, if someone wants to go long, what does it need? What's the condition? Let's say you are not in the trade and you still see an uptrend. When do you go long? Well, you need to see price action above, right? Now it's rejected. It's not safe for you to go long. Why? Because it can come down. You don't want to enter a long and be immediately into the reds, in the negative, right? You need to see price action above, like here. Rejection, came back, one more time, and it's acting as support. This is what kind of things you need to see. Rejection, support. Resistance, support. And then say, okay, I'll take this trade. And then you go. Until when? Until here. Now, you don't need to close it 100%. Unless you went crazy with leverage. If you went crazy with leverage, you don't want to risk yourself, you go level by level. But if you don't have a high leverage, this is a checkpoint. Is this price staying above in a couple minutes? Fine, I stay. Right, it's like a checkpoint. And you take it step by step. Don't need to panic. Right. What's the time? 12, 10 past 12, okay. That means Chris is gonna come soon. What time is Chris coming up? I need to make sure that I don't collide, guys. I'm not allowed to collide with anyone else. Yep, he's going now live, so I need to close this down. Ladies and gentlemen, thank you very, very much. Let me see the messages. I love your messages. Is it possible to execute a trade on schedule? Yeah, I spoke about that one. I'd love to stay here all day. I will do. I promise you, I'm gonna break that record. 8 hours. I'm gonna update the daily journal. I'm gonna think something new and put it, implement them. Yeah, indicators. Of course I do. Of course I do. When you wake up in the morning, you know, yes, I teach about real-time price action. But when you wake up in the morning and you go through your list, I mean, have you seen my list? Have I shown you my list? No, that's a small list. I mean, no, that's nothing. Go to Bybit. Look at that. I have a huge list on Bybit. I have all the tokens of Bybit in there, right? So it's a huge list. And how do you know which one is moving? Well, I moved to change percentage. So I see, oh, ZBC is moving today. I don't know why. It's moving. Look at that. Massive dump, and then it pushed to the up. But at the same time, I switch on my indicators. And when things want to move to the positive, let's say to the upside, if that is positive, that chart, I mean, look at that. I mean, it's not bad. Let's break this down very quickly. 12 hours. Maybe I want to go to the monthly. Do I have enough data on the monthly? I can use that little candle there. Okay, fine. Here it is. Troop, troop. I'm going to expand that. Template to 8 is fine. Thank you. Coordinates. Expand that to the left. Expand that to the right. Sorry, left. You right. Here we are. Okay. And then go down to 12 hours and see what's going on with my levels. Right. This is a major support. Okay. Here's my 0. Gonna go to 45 minutes. Here we are. And here's the levels. Oh, it broke the 50, right? It broke the 50. Now I need to see that it stays there, right? At the same time, on the 12 hours, I need to see if that long has any chances, right? And I'm going to 12 hours back again because this is the time frame that I use, and I turn on the indicators, and my stochastic RSI is going down, and I'm like, okay, stochastic RSI is going down, price action is going up. That's divergence, right? Look at that huge, massive delta volume, right? Look at a sell-off. Someone dumped it big time on it, and we can see the price action. So that most likely is going to go even further down. That it was a reflex, okay? It's dropping down. The price is reacting, trying to jump off because why? It touched a lot of buying orders, and then it touched all these buying orders here, and it shot it up. But now later on, it's going to come down again later. When you usually see these huge, massive downs, so I have a warning because of the indicators telling me that it's still not a good time to buy, even though you have that explosion to the upside. Nope. So then I go to the next one. 12 hours, right? Oh, we are on the, not only we're going to the overbought area, not on the oversold. Too late for that. I should be, in that trade according to my indicator on the 12-hour indicator, I should be going long here, over there, not here, right? What's the next one? Loom. Look where it is. That was the best time for you to go long. RSI at the bottom, stochastic RSI at the bottom, ASO losing steam. That was the perfect time for me, the perfect level for me to get in. That was it. There. Right? Not here. Too late now. You get the idea? This is what I do with the indicators every morning. Like, I go very quickly on the 12 hours, and I just go through the chart. I don't need the TA. I don't need to do breakdowns on all of them. I just see, oh, we had a cross up. Oh, that's interesting. Ladies. So 1,000, 10,000. Is that 10,000? Yeah, 10,000 ladies on Bybit. It's moving up, a cross up. Okay, that's interesting. So let's pretend that attracts my attention, right? Oh, that's interesting. It's moving. Okay, break that down. 12 hours. Let's go to the weekly, monthly, whatever. Do I have a candle? Yes, I have a monthly candle. Right, monthly range, top, bottom, double click. Move to the left as much as you like. It doesn't matter. You can double check your lines, the price action, how it's reacting to these lines. Lock it. Go to your time frame, any time frame, and here's your levels. All right, and you're like, okay, I see you. You touch that resistance. Now for me, it's too late for this level. I need to wait. It's a waiting game. So here's my levels. 22 minutes. Here it is. If I want to go long, I need to see price action claim this level. If it claims this level and acts as a support, then I go long. If not, I'll wait to come back to this level and act this as a support. If we act as a support and say, okay, it's building structure, let's see a range, let's see a breakout of the range. If I see a breakout of the range, I'll grab it and I go here. If not, then it's going to lose it, come down, and then I'm going to short it. It's fine. I mean, you know, this is what I do every day. Get the direction, get the 12 hours, break them down, and then go level by level. If the level is too wide because of the time frame that you use or the candle that you use, it's fine. Break that even further down. All right, here it is. Boom. And this is the 5 minute, and look at the price action, how it's respecting these lines. You can't have anything simple like that to my findings, right? This is what I do. I go through the list and see the indicators. Indicators will give me the bigger picture. Price action is going to give me the real time. Bum bum. It's losing. It's losing. It cannot go above, and it lost support. What it does, it goes down, baby. That's what it does. So I have to wait to come back to these levels if I want to go long on this baby. Or I'm going to go short time. I don't like to trade the corrections. Can you trade the corrections? Of course. If it's an up leg, pullback. Up leg, pullback. Can you trade the pullbacks, the corrections? Yes, you can, but it's very limited. High risk. If it's an uptrend, I like to do the up legs. If it's a downtrend though, down, rally up, which is the opposite of the pullback correction, rally up, comes down, rally up, comes down. Can you do the corrections? Yeah, you can. Risky. I like the big legs, the big moves, right? So you see the valid points? That's the invalid point, and that's another invalid point. Where's the next invalid point? There. This is how you break things down. Nice and easy. My problem is I'm panicking too soon. Okay. You need to, you know, go to a nearest sports shop that you have and go to the salesman and say, do you have a baseball bat? I need one. It's going to ask you, do you want a wooden one or a metal one? I like the aluminum. Get the aluminum, the strong one, you know, the metal one. And then bring it back home. And then when you see, you know, emotions, don't break the screen. When you see emotions, you beat them up. You don't trade with emotions. If the emotions walk into the room, you walk out. Simple. It's the time for you to switch off the monitor and take a walk. Go and breathe. Have a break. Have a Kit Kat. Something. Excellent stuff. Thank you very much. Very informative. Thank you for the positive. Thank you for the love. Yeah, the same thing. Same conditions. Either way, same conditions. If you want to go short, right, it means that you're going to lose that level, and that is a valid. If he loses a level on a short, it's valid, right? And if you lose that level, checkpoint. It's valid. Lose that level, checkpoint. If it holds here and strong and it doesn't lose it, it's like the uh-oh moment. Like, why doesn't continue going down? Then you find a short, and if it's giving you a long-term stop there, then you say, maybe I think it's a good time for me to take profits, because if you wanted to go lower, it could. It doesn't need to hold for a long time. Okay? Same conditions, same levels. You don't need to change a thing. Okay? Same approach. These levels are there for you to help you to see the direction, the valid and invalid points. And this is how I do. I go to 12 hours every morning. This is what I do. 12 hours, space bar. I'm going to the next chart. Oh, it's moving. Space bar. It's moving. Next. And I just go with, phantom. Here's phantom. Look, phantom. What phantom done, Maybe possible a reversal. Possible it is. How do you know? Well, low, high, low, high, low, high, low, high, equal high, right? This is your low. All the lows, lower lows, right? And what happens? It turns around, it attacks the same high, comes down and is giving you a higher low. And you're like, uh-oh, something's going on here. We've got a low and a higher low. What next? It needs to go higher and break the previous high. What did it do? It broke the previous high. It's fine. Now, resistance. It's not time for you to go in now. It's time for you to take profit if you enter that trade. Okay? And you go level by level. If Phantom goes above 0568 and is looking bullish like it's holding support, then you can open a new trade and go up to the 50%. Every time that you reach a level, it's a decision time. It's an action time. What do I do? Nice and simple. Now it's not time to go long. Do not chase the pumps. This is where everybody sees resistance. It's not smart for you to go long on the resistance. You need to go long on the support, right? Keep it nice and clean and simple. You're gonna be fine. Yeah, the strip club in Washington. Yeah. Funny. Good one. Right, okay guys. I have to shut off. Have a very, very good week. Have a very good day. I hope that was helpful. Always remember that you don't need to risk with your high leverage, and also you don't need to risk all your money every day on the trade, right? You need to compound until you reach the daily target. When you reach the daily target, you stop compounding the trading size. You need to compound the wallet size. Bring the money in, right? Book these profits, put it back in your bag, because you have a target to reach. Where is my journal? I've lost my journal. I've closed my journal. I apologize. There it is. Let's bring my journal back. You have a target, any target, doesn't matter what target it is. Every person has a different target. You need a target. Go at the bottom. You need to reach that target, right? So you need to put money into the bag, right? Book your profits. Profits are not yours until you book them, so book them. Okay, ladies and gentlemen, I'll see you in a couple of days. And take things slow, easy. Take it easy. So far, let me go back. Let me do the closing on Bitcoin. Let's have a look at what Bitcoin is doing. So far, let me clear all this mess. I'm not trying to be, giving you FUD or anything. So far, what I see is all the highs are getting lower. If I get my pen, thank you. So all my highs are getting lower, all my lows are getting lower. This is a little bit of, a case of, this is my low and this is my high low. It's supposed to be a low, right? But it's not too late. You may get a continuation and then we get more lower lows. This is a high low according to this one. However, my high are still lower. I cannot ignore this action, right? Maybe we're gonna bounce. Maybe this is the time that it wants to reverse, and it got tired of this beariness and dropped down, and then it decides to go higher. It's fine. According to this range, I don't remember which range that is. What range is that? We've got the 12 month, we've got the daily range. Is that the 6 month? Did we do the 6 month or the monthly? What did we do here? That's why you need to name them. Monthly, rename that monthly range. Here we are. Monthly range. So according to the last previous month range, you're above the 50%, right? So here we are. Now 50% is acting as support, fine. But for me to be, continue to be bullish, you need to claim and gain this level. If you don't claim this level, bye-bye. Right, maybe we're going to see weakness and then come dropping down. Just, pull the levels up there to make things nice and clean for you. Okay, make things that is understandable to you. Nia, can you show me how you draw your peeps there below the previous month? Nia. Okay, let's bring Nia up. Nero. Let's do Nia here. Okay. Bye, big Nia. perpetual. There we go. Here we are. Let's go to the 12 hours. Let's have a look what's going on. What's the direction? Okay. The direction is, drum roll, is on a downtrend, right? Here we are. If you like diagonals. So it's a downtrend. Okay. So you can break this down. You can do, other people like to do like the impulse. You can do the impulse. Here it is. Here's your level. You can do that. Or you can do based on the previous month. So let's go to the previous month. Here we are. Previous month. That's the current candle. I cannot touch that. I have to find a historical candle that has information above and below my current price. So that candle there is quite good. Here we are. Double click. Break that down. Go to the left. As much as you like, as far as you like. You know, you want to see price action and compare a little bit. It's fine. You can do that. Here we are. Lock that. Padlock. Go down to your any time frame. 90 minutes is a good daily time frame. So here we are. Okay, here's your near. Near is trying to go, let me center this. Okay, here we are. So near is trying to go find support, trying to stay above the 50%, and it fails. It comes down, resistance, deviation, and then it's trying one more time. So the next thing that you need to wait for near is to see if it's gonna break against the 50%. Does it have the guts to break above the 50% and then stay above? Okay, look for how long it stayed. A lot of people had a long here setups. It's fine. You can have a long setup here, right? And your target was here. Where is your stop loss? Under the line. Did it break it? Yeah, of course it did. So you're out as soon as possible. You don't need to have a stop loss. Don't do that mistake. Oh, this is my profit, this is my stop loss, the next level. No. If price action is supposed to stay above this level, your validation point, that's not the first invalidation point, that's the second invalidation point. Your first point is down here. Now, if you find difficult way to find the stop loss, I'll give you a little trick. Here it is. Break that level into a smaller level and see in which level you can put the stop loss. So here we are. You're going along here. Let me use the long tool. So you're going along here. Here's your target. And here is the first invalidation point. You go one level deep. Right? And here it is. If it goes below that level, it's way too invalid. You got the big invalidation and you have the second small invalidation. Boom, out. Right? And this is how easy you can do your invalidation. I mean, and look at your ratio, 9 to 927. Your target is 6% times your leverage, right? Trying to, make things as simple as possible, right? And controlled as possible. Stop loss has to be as minimal as possible, right? If you lose that level +1, the minor one, you lose the big level and then the minor one, you don't need more evidence that, that long trade is a bad idea. It went all the way down. Okay, so nice and easy, nice and clean. Identify the stop loss. Here it is. Right? Other people will say, oh, I want to target the previous low. You can, but sometimes that can be a little bit too deep, right? Maybe the stop loss is too wide. How much is it? I mean, let me do an example here. Let me increase that. Let me pretend that we're going long here. Give me the long tool, please. Thank you very much. So here's the long tool. You want to target the top. And let's pretend that you go under that previous low. It's a very solid tactic. This is what we teach in the Sniper Club, right? Sniper School, sorry. But what if you do this, right? You break this down. You put your long here, same target, but your stop loss is going to be on the first minor invalid point. And now you see the difference on the stop loss. And the ratio, 4.6 is a very nice ratio. Anything above 3 is good. 3 is good. Under 3, not good. Anything above 3 is good. Anything above 4 is really good. Right? So look at the difference. So why do you need to risk 1.4 when you can get out on 0.8? On the, sometimes on the stop loss you need to be, these kind of markets, if they shift, you need to see it as soon as possible for you to take action as soon as possible and get out as soon as possible. And if the market's going to play games with your mind, let's say that it triggered your stop loss and then turn around and it went above, it's fine. Don't get pissed, don't get upset, don't even play that game. If the market is playing a game and it hit your stop loss and then turn around, it's fine. You grab the next level. Okay? You don't care. You shouldn't care. Okay? I know that you're going to lose some money. It's fine. We know this. The market is designed that way to take money from us. Okay? We're trying to minimize that. We know that we're going to give out money, but I want to give out, let's say, $5, but I want to get from the market $50. So it's fine for me to give 5, as long as I make sure that I grab 50 the next time. Okay? So treat it as tips. You give the market tips. Then it's going to be, someone's going to say, oh, we give tips before we get the money. I know. Sometimes it happens the other way around. But it's okay. All right, good. Ladies and gentlemen, I shall see you next week. Take care. Have a good week. Have a good time. Trade safe. Bring things as, down as simple as possible. And you're going to be just fine. Okay? The trick is the right timing and quick decisions. Don't take it personally. You are not marrying the token. You are trading against the performance of it. Okay? That's it. You're making money on the move. So you need to take decisions very quickly, not personal, not emotional. Okay? The sooner you master this, the better. And you're going to compound for X amount of time. You're going to compound at the beginning until you reach your daily target. After that, you need to switch. You need to compound your wallet, right? Put the money back into your wallet and save it. Right. Take care. Have a good time. I'll see you next week.